Hi, everyone. Thanks for joining Swiss Digital Banking, Sygnum's regulated approach. Hi, this is John Lagman. I've had the honor, this is my third time actually moderating. I'm the APAC, FX, and crypto market and product specialist for Bloomberg. I've been in this role for about 11 years, and I have the honor today of having Mathias Imbach. I hope I pronounced that right, Mathias, the CEO
Well
of
done.
Sygnum. And maybe if you could take a little bit of time and introduce yourself. And for our listeners today that may not be familiar with what Sygnum does, can you give a kind of quick intro of what you guys do?
Sure. Thank you, John, and thank you for the invitation. Great to be here. I'm Matthias, one of the co-founders and group CEO of Sygnum. Sygnum is a digital asset banking group, which has, from the very beginning, when we launched in 2018, had the kind of the idea to assume that future requires and has heritage. That means if we want to have true adoption of blockchain and crypto, and combine it with where the assets are today, then we need to go the full-on regulatory approach. And so Sygnum today is a Swiss regulated bank, as any other bank, following all the same rules, and then also has expanded to the UAE, goes to Europe via Liechtenstein and Luxembourg, and also since the beginning been a licensed entity in Singapore. So it's been our approach to operate across Europe and Asia, and we have an all-in-one account approach towards digital assets, that is custody, trading, various asset management products, but then also a lending infrastructure with crypto as collateral for Lombard loans, and a tokenization engine. We do that for institutional clients and high net worth individuals, and also have a B2B offering where we empower more than 20 banks to offer also crypto to their clients. Last thing I want to mention maybe is that while we are a crypto-focused, digital asset-focused bank and digital asset banking group, we also are fully integrated with the fiat world. So you can have the 24/7 conversion. We are a deposit-taking bank. And of course, you can also invest in traditional securities if you wish so.
Great. So, let's get going, I guess. Matthias, now you guys were founded in 2017. I mean, if you think about it, wow, that means 8 years is like a very long time in crypto, a very different era. Everyone's talking about trustless, decentralized systems were like the dominant narrative. What was it that drove you and your co-founders to basically do something kind of opposite, look for a regulated banking approach? When the industry seemed to be moving away from this kind of traditional or TradFi kind of institution.
I think it has a lot to do with our backgrounds here for co-founders and on our stories before Sygnum. So in my case, for example, I was managing a family office of an Indian industrialist, Ratan Tata, who passed away unfortunately last year. And I've seen what it means to invest as an institutional investor into structures, into startups, etc. Another one of my co-founders is Luca Müller, who has been a lawyer in Switzerland at the very forefront of establishing or leveraging the Swiss Foundation as a vehicle to launch permissionless blockchains, with the first one being Ethereum. So Vitalik and co, they basically knocked at his door and said, we want to do this. How do we do this legally? So he had this viewpoint. The third among us, Manu, has been the technologist, has always operated across banking and finance. And Gerald, the fourth, has been operating as also someone managing the private markets portfolio of a large family office, and before for institutional investors. So we've had this kind of institutional mindset, understanding what it requires. And we actually initially wanted to set up a fund, and then realized that there's no infrastructure to do this right, so that we could go with good conscience to family offices and real institutional investors to actually get their money and run the fund. And so that was one driver. Second driver was we were all involved into, for example, also the whole ICO craze. I personally was very libertarian. I love to invest in many ICOs because I love that democratization element, only to then realize that it was also a bit detached from reality. And the moment these developer teams wanted to have a bank account, for example, they would not get a bank account for simple salary payments because they were blockchain crypto related. So all of this together we came to the realization we need infrastructure, we need to accept that future is heritage, and we need a crypto bank. And that's how the idea for Sygnum started. I also want to mention, luckily, I've never worked in a bank before. And hence, I did not know that what it would take and what it would require to build a bank, because otherwise, probably would not have dared to start it.
I was curious. You mentioned that originally you're going to do a fund. Was it more like a VC or liquid markets kind of trading fund originally, or?
It was really a fund investing in tokens, right?
Mm,
And this can include, the then increasingly, that was the early time, so it was mostly the Bitcoin and Ethereum, plus then ERC20 based ICO related tokens, and then only over time, obviously, this would have included other layer ones, etc. As you know, as the ecosystem has evolved, but it would have been a token fund, which was very difficult at that time to set up.
I see. I understand. So now, one of the things I remember at the start, you kind of were talking about. I mean, it's pretty part and parcel of banks is regulation. Obviously, just in general, it's very hard to get a banking license in places like Switzerland, Singapore. Can you kind of walk, someone who maybe, who knows, maybe very entrepreneurial and really thinking of maybe someday doing something like this? I mean, what were the kind of regulatory hurdles you kind of face? Especially given that we're dealing with digital assets, and maybe kind of like a part two, maybe now that you've already set up and whatnot, given that you mentioned UAE, say you're in Luxembourg, Switzerland, Singapore. I mean, how do you kind of navigate all the different kind of regulatory requirements? So yeah, sorry, it's probably a long question, but more about the setup and then now how you kind of go with the regulatory environments that you're dealing in.
Yeah, so the first step was really to find an environment which was susceptible and also willing to go through that approach with us. And I think at that time in 2017, 18, and 19, that was the time when we were applying for the banking license and also various licenses in Singapore. This was a time where the regulators were susceptible and open towards true technology neutral regulation and wanting to push into that direction. In particular, in Switzerland, there was political support for that. And quite frankly, because you mentioned current or future entrepreneurs, right now, quite frankly, this wouldn't be the case. It may be counterintuitive, but it was easier then than today, probably, even though many years have passed. It is just today. It's much more difficult because after 2022 and 2023, there's been all these hacks and these scandals. As a result, there's a lot more reluctance. But what it required was openness by the regulator, and then us abiding by all the rules and regulations, saying that we're applying all the rules that are counting today in traditional banking also into crypto banking. And that led to many workshops with the regulators on an ongoing basis, sometimes 8 hours, full day workshops to go through compliance. How do we apply travel rule? How do we do the risk management process so that we could apply and write the policies that would fit today's rules, but applied to this new technology. And then how do we apply this across different jurisdictions? Again, it's fluid because over time, different jurisdictions are changing their stance towards regulation and regulating or not regulating digital assets. So it's about being agile, about being there where it matters at the right time, but also at the same time taking a long-term approach. So, for example, the UAE over a few years ago started to really embrace the technology and starting to create frameworks. We liked the ADGM, the Abu Dhabi framework, a lot, so we decided we're going to go there, double down, go through the regular process, and now for I think almost 2 years we are licensed, regulated there. In Singapore, it was a bit similar. We started with the CMS licensing regime, then the payment services licensing, the major payment services license came, which when we started was not even a framework. It was not even in law. And so it's about adjusting constantly. And then, but we never went away from our core principle that everything we do is with the regulated first approach. So the moment we decide we want to go to a new country, we check whether there's a regulatory framework which lets us do this, and otherwise we simply don't go there.
I understand. Okay. Well, let's talk about your day-to-day business now. I mean, I think I saw some numbers for 2024. You obviously had impressive growth metrics. I think spot trading volumes doubled. Your derivatives trading increased by 500%. What's driving this kind of institutional demand? Has a lot of it come from, you think, the approval of the Bitcoin and Ethereum ETFs? I mean, has that been a major impact on your business?
I would say yes. There has been obviously the beginning of last year. Well, I mean, look, if we even take you a little bit further back in 22, 23, obviously there was this huge loss of trust in the industry, and so this had to be rebuilt, and we had to go through that bear market and rebuilding trust. By the way, this process is still ongoing, and the big elephant in the room was, of course, the US, which had this regulation by enforcement approach, which was also politically driven, and so that held a lot back, because whatever the US does, other jurisdictions and also institutional investors will listen and look very carefully. With the approval of the Bitcoin ETF, I believe it was in February 2024, this was a wake-up call for many that, okay, this is now really turning into an asset class that is here to stay. And that triggered the demand in the month to come. And then, of course, when the Trump administration won, and then all the promises, which so far actually seem to be followed through on, this was then all just significantly increasing the addressable market and the addressable market. And we saw that in particular in our conversations with B2B clients, with the banks that now had the air cover to say, hey, if the US is doing this, we should also do that. And in Switzerland in particular, we already have the framework in place, so that in Switzerland now, it's actually impressive. About 40 banks in Switzerland are dealing in some shape or form with blockchain. I think there's probably no other country where this is the case. It will change fast now, though.
Yeah. And I guess, as you said earlier, the key is to be able to adapt to the environment. I think you were saying earlier with the regulatory part. I'm curious. I mean, obviously, if you look at ETFs, they're kind of really a more kind of passive exposure. Looking at all the other services you have, it seems much more active. Things like staking, lending, trading. What's the kind of value proposition when you're talking with clients that that they pose compared to ETF products, what are the kind of things you found that why certain people or institutions choose these kind of more active management over these traditional like passive exposures like ETFs?
Yeah, I mean, first and foremost, one has to say, and I'm happy to say that for particularly the BlackRock IBIT launch is, I think, the most successful launch ever, right? And now I think they surpassed 70 billion, which is just unbelievable how fast that went. So I would say this obviously opened the doors for everyone to really get an allocation and fast. And I think that will continue. And there's also nothing negative to say about this. It increases the pie, it increases the access to the masses. So great. Obviously, for those who are doing that next step of really wanting to understand digital assets and then wanting to do more, for example, having 24/7 trading, not linked to bank days and 9 to 5, but also on the weekend, or they want to use crypto as collateral for lending, or they want to stake to create a yield on top, etc. There, you then have to go beyond the ETFs, and this is kind of the area and the client segments that we're focusing on. This will be crypto foundations, founders, Bitcoin maximalists, Bitcoin whales, larger Bitcoin holders, etc., that require the full set of banking services tailored to these needs.
I see. Did you find, I mean, obviously, having operations in multiple jurisdictions, was there almost a geographical kind of split on your business lines, or is it pretty much the same in all the locations?
I mean, first, there's a split in terms of where our revenues globally would come from. Again, it's about 50% Switzerland, and about 20% Singapore, and then the rest is Europe and other parts of Asia. No US, as we've never focused on the US. And then in terms of the types of revenues, that obviously is quite different. What you generally can say is in Asia, it's it's a more risk-taking approach. It's more trading heavy. Versus in Switzerland. In Switzerland, given we have the broadest portfolio of offering, the full banking offering, it's just generally more things that our clients do. Sometimes they would hold both crypto, fiat. They would have some ETFs in traditional finance, but then add some derivatives overlay with Bitcoin as underlying, etc. So take a loan to buy a house. So it's that bundling of services that is at the core of what we do here in Switzerland. Interestingly, or one of our closest or fastest growing segment is actually more going towards prime brokerage products such as Sygnum Protect, where we provide an off-exchange custody solution for people to keep assets with us off balance sheet, so bankruptcy remote, but still have access to the large crypto exchanges to where they get a virtual margin to then trade. So that is kind of also a bit in the vein of professionalizing and institutionalizing the value chain of for institutional investors in crypto. And I think we're playing an increasingly important role in that.
Nice. Now, another kind of product line, which is very different from what you'd see at a traditional financial institution, is tokenization. Now, definitely seems something you guys are focusing on. I believe you had a recent collaboration with Chainlink and Fidelity. Can you kind of explain maybe for the audience, how bringing these kind of net asset value, data on chain stuff is very foundational for scaling tokenization, and what type of traditional assets you see being tokenized next, I guess?
Yeah, so when you said it's a focus from us, it's certainly something that we've been investing in from the very early days, about 7 years already now. And the reality is that if we look in our revenue mix, it's still a very small part of our overall revenue mix. And why is that? It's probably true that many have predicted for tokenization. If I look a few years back, right, many people have predicted already 5 years ago that by this time we would be like trillions of dollars would have been on chain, etc. That never really materialized. And one of the reasons, to answer your specific question, in my view, was exactly that the infrastructure was not in place across the entire value chain for this to happen. What I want to say with this is the moment you tokenize securities, you're getting into securities laws. And that's from, the entire value chain, who is even allowed to distribute, how are they distributed, what is suitability for clients, the compliance environment, etc. It just gets very much more complex than if it's a non-security that you're trading. And as a result, the whole infrastructure across the value chain needs to be in place. And what we did with Chainlink and Fidelity International is exactly one additional such element, by making sure if we have an asset on chain, of course, you also want to have the NAV on chain. Otherwise, you cannot reap the benefits of it being on chain. And as a result, that was the breakthrough that we did there. So it really depends on that part, so that we can see true adoption. This year, end of last year and this year, I believe there is a bit of a breakthrough that we've seen the fastest growth in tokenized assets, particularly when it comes to US treasuries and money market funds over the last 6 to 9 months. Certainly also what we have focused on, for example, with Fidelity International, was basically a treasury fund. And the other element we're focusing on would be debt structures for SMEs with real cash flows, etc., that can be tokenized. And the third one is access to private markets, where we cooperate with Hamilton Lane, where we could bring down the investment into a private markets fund from 250,000 to 1,000 a piece, because of the efficiency of the subscription and redemption process, just to give you a few examples.
Yeah, I'm curious, since you mentioned, obviously, as you said, there was a lot of expectation about the size of the tokenization market and whatnot. I mean, if you're looking like, say, 5 years ahead, do you think that the infrastructure is catching up, that we may make that kind of exponential growth, or is it still maybe a bit, not going to be as big a jump as to the next level as some people think?
So I want to be honest. I may not be the right person to make even more predictions about it, because about 5 years ago, I made quite lofty predictions that did not happen. So I accept that I got this one wrong. What I'm quite confident about is that for the reason I've mentioned before, at some point there will be that inflection point, because enough trusted nodes in the traditional financial world, that is, banks that have the infrastructure to even custodize and accept such tokens. The moment you have enough on-chain NAV, to the topic I've mentioned before, the moment you have people that know how to create such prospectuses, the legal side of things, people that have thought through the risks, etc. The moment that value chain is on-chain, there will be that inflection point. and then it can go very fast. So when that exactly will be, I think we're sort of at the beginning of it, and I would be very disappointed if in 5 years we would not be significantly further down that route. But overall, we need to accept this is kind of bringing the entire financial market infrastructure end to end on chain, right? And that is a lengthy process which will take years overall. But when we see what's happening in the US, also now on the legal side, right, with the stablecoin bill advancing, market structure bill in the making, etc. So that is very encouraging, again, because it's the largest financial market in the world that is trying to take the lead here.
Right. So, if we continue to look kind of ahead, so if we try to find the next phase of, say, digital asset banking, I mean, how do you envision, the relationship, as you said, maybe it's we could focus on the US market or wherever, the relationship between, say, centralized regulated institutions like yourself and maybe decentralized finance protocols evolving. How do you kind of see the relationship in the future?
Yeah, I think first and foremost, I think there's going to be. I mean, what we're in the midst of is a convergence of TradFi with future finance, more the DeFi side of things. And the first step of TradFi of getting involved with crypto and blockchain was really about creating the base layer rules for banks and other regulated financial institutions to get involved, to have clarity on what it means to custodize such a token, to create brokerage, to broker these tokens, to trade them. At the same time, also the handling of stable coins, of what it means to tokenize these assets. And I think the next step will be what does that mean for staked assets in detail? And then, very fast, it will be about how can we maybe connect the more decentralized world with the TradFi world. We are also experimenting with this and want to stay at the forefront on this. But obviously, this poses significantly additional topics that need to be addressed. How do we ensure that if you interact with the more decentralized pool, smart contract based, to just give you a few examples, with the travel rule, which the FATF is just there, right? That you need to collect certain information about each party involved in a trade. But also, if it's a smart contract that you're leveraging to match as a matching engine, in the banking world, there's this this notion of material outsourcing, and if you outsource something to a party, you need to do financial due diligence and operational due diligence on an annual basis. So we have received questions such as, how do you do that on a smart contract? Look at the circular, and how do you apply that? And you get in all sorts of sometimes almost funny questions, but these need to be worked through, and we are in the midst of this, and other players as well. So,
but when you were saying that, I was thinking about what you said earlier about when you first got into this space, it was like certain parts were sort of detached reality, and you had to bring it back into the kind of infrastructure of a regulated kind of framework and stuff. So yeah, definitely should be very, very fun and challenging and rewarding if you can get it right, for sure, and stuff. So for sure. So yeah, this year the Redefine Tomorrow theme has been building through cycles. I kind of mentioned earlier about entrepreneurs, but someone who struck out and built a great bank. What advice would you give to, say, entrepreneurs, institutions looking to build some kind of sustainable, regulated approach to digital asset kind of innovation or building?
I mean, what do you mean? What would be can you repeat again? What exactly is the?
Any kind of advice you'd give to someone? I mean, maybe not exactly for something like in a bank or whatnot, which we kind of mentioned earlier, but anything else that, that you would tell people given the current environment, because as I said, that the whole theme of Redefine Tomorrow is building through cycles, any kind of, advice you'd give someone that is building through, I guess, a up cycle and whatnot. Yeah.
So I think one thing I think is very important is that if you're an entrepreneur and you have an idea, challenge yourself whether the idea is good enough and you have the energy and the belief in the idea that you can exactly build through cycles. Because If your motivation is to make a quick buck, or to flip something fast, the chances that you fail are so high, because it's very tough to build through cycles, and you likely will have to build through cycles through the ups and downs. And particularly in the crypto industry, where you are basically with 24/7 immediate liquidity, particularly if a token is involved, it just lends itself to hype and booms and busts. So I think at the core, it's about building a culture which draws people and attracts people that are willing to keep both feet to the ground every day, so that they don't have to panic when things look a bit shaky, but at the same time also don't lose ground with reality when everything is flying top and to the right. And we've gone through, as Sygnum, through exactly all such phases. I remember when we decided to launch or start to build and go to the regulatory process, that was after this huge ICO bust, right? And we had to basically build through it. And still, when everyone told us people will only use permission blockchains, and nobody will work with, I remember all of these discussions, and you have to have that belief and to not give in. So that's probably to stay humble and to have the strong enough belief to see it through is probably the most important advice. Then the second one is there is a certain bit of luck also involved, in the sense that you are at the right time at the right spot. I mean, I had to realize this myself, and I mentioned it today. I would not have to want to start the company we started 8 years ago in Switzerland. I believe it would not be possible given the regulatory environment that we're currently facing. So it is also then you need to have that gut feel and that nose for value when you should start what, and that is more art than science. And then you need to have the right partners and friends and that back you through a process.
See, yeah, it sounds like, I guess if I could say it, belief, perseverance, and to a certain degree luck. I mean, I guess being in the right cycle and whatnot. So yeah, I mean, maybe finally, any what should our audience kind of know about Sygnum's upcoming initiatives? Any kind of product launches, opportunities, any other kind of things you wanted to talk about at this point? Yeah, so, sorry, I didn't know if you had heard me. So, maybe we could start focusing any kind of upcoming initiatives, product launches, opportunities. Like, I mean, obviously you can say names, but any potential collaborations or things that as you continue to kind of expand globally.
Yeah, so you mentioned it at the end. It's about global expansion. So we are in the midst of getting ourselves MiCA ready for Europe. So that's a big focus for our international team. We do this via Liechtenstein. Then it's about further basically loading our platform. We believe we have the base, the core product portfolio works. We have product market fit. So it's really about scaling, about making our operations or go to markets more scalable and more effective. And there I could differentiate between three kind of broad customer streams and what that means. So on the B2B side, as mentioned, we have more than 20 banks that are already relying on us. We believe there's a few very important banks also in Switzerland, EU, Asia, obviously also in the US, currently getting ready to also offer the base infrastructure, and we are positioning ourselves as a key enabler for such players. Here, I obviously cannot name the names as you suggest, but you can be rest assured that we are in these discussions. So that's one. On the prime brokerage side, it's really targeting and tailoring our products even more towards the large institutional investors, very much also increasingly in traditional market makers, etc., that want to start trading and interacting with this ecosystem. They have very different requirements in terms of how they interact with counterparties, etc., and we want to be that trusted counterparty they can work with. That's the second key focus. And then third, on our direct clients or high net worth individuals, founders, but also just crypto companies. It's just continue to build relationships, being on the journey with them. And what we see increasingly is that they're significantly professionalizing their treasury management, particularly foundations. And so we have, on the basis of working with more than 70% of the top 50 projects, we have created our own treasury framework where we can help these foundations to holistically manage their wealth for the long term in the interest of their community. We bring together their CFOs on the regular basis for experience sharing, etc. So that's maybe what I would highlight on the third pillar.
I'm curious, coming from, if I recall from the start when you were talking about how everything started, a lot of your partners, you all came from dealt with like family offices or high net worth. You were talking about this kind of professionalization of some of the treasury foundations. Is it almost becoming like a traditional in EAM or external asset manager type of focus, where really it's more about pricing and stuff? They kind of are doing their own kind of analysis more and more?
Yeah, I would say what has happened notably over the last 12 months is that many have hired, particularly in CFO, or sometimes also in CEO roles, seasoned professionals from TradFi, or some. What you've also seen is that many who have with large TradFi players had a digital asset related role, or were in the innovation team. They've basically jumped into the more DeFi or more foundation side of things for layer ones, and they obviously bring a very different mindset. Again, a much more institutional mindset. They're about, again, how can they squeeze the last bit out of their treasuries? How do they diversify their custody exposure? How do they manage their counterparties? How do they integrate for reporting, for tax? It's a huge step change. Yes.
I see. From a lot of the, you also mentioned during the trading that there was other kind of differences or things that are changing. I was curious that more and more in even like TradFi, you're seeing more and more for example, quantitative, like whether it's banks with APIs and everything's becoming a bit more systematic. Are you getting more and more? Is there becoming a even larger technology kind of upgrade that you need to do with how you're or how you're actually transacting with some of these individuals?
Yes. So I think I would say our technology investments have not stalled. They have stayed steady to increased because we believe is right now is a lot about getting ready for the future. We need to always stay 2 to 3 years ahead of traditional banks, not focused on digital assets in terms of our infrastructure and tech readiness, because the base spot Bitcoin trading, just to name you a sample, this will be an absolute commodity in the future. So we need to we can only grow by gaining a big share of the B2B pie, enabling banks, and then on the other hand also investing in technology for specialized solutions for players such as the ones you mentioned, traditional market makers coming in, and then giving them the tools that they need to have an impact. So yes, so in that sense, technology spending in our an investment is a core for our future success.
Understood. Now, I think that you kind of mentioned a couple of times about how you wouldn't want to have to start from scratch in the current environment. Maybe taking it kind of slightly different. Another thing, I believe your CSO, Thomas Eichenberger, I read mentioned that he sees a lot of the international banks will start offering crypto services starting from the second half of 2025. I mean, how do you guys look at the competition from these traditional financial institutions? What kind of competitive advantage do you have, you think, already being in this space?
Yeah, first and foremost, we should be and are happy that this is happening, because if the key players in the ecosystem are not getting involved, then this will not be a growing pie. And I sometimes wonder, or it's intriguing to see how emotionally and how much debate there is about crypto and Bitcoin in the even traditional press, given it's still, if you compare it to other asset classes, minuscule scale and size. So in that sense, it has an overproportionate share of voice and emotional triggering effect on people if you compare it to the actual size, right? And so yes, it's great that this is happening, because we hope that at some point and very soon, this will be the most normal thing for a bank to have basic trading of crypto, because it's just another asset class. So that's one, because it increases, it confirms our thesis, again, that future is heritage and that this is asset class is here to stay. Second, of course, we need to stay competitive, and we have the advantage of being focused on this, of having the networks and being intertwined. Quite frankly, also having followed and supported many of the projects since the early days, when others would shy away and not even touch their business. And so we have also built these deep relationships in the ecosystem. And then thirdly, we want to be a player, as mentioned before, who help other banks to get access to this technology in a faster way, because it is not just like adding another IC number. It is quite a different end-to-end infrastructure, compliance, risk, operational process if you touch crypto, given just the nature of blockchains. And so for many banks, particularly medium-sized, let alone smaller banks across the globe, they will never, in my view, it would not be a winning strategy for them to build it themselves. And so players like ourselves, we can help enable them. And with that, obviously, benefit for them grow in pie. And then, as mentioned before, the third element is really to be more innovative and staying ahead of the curve with specialized products and services.
Understood. Now, one thing, it seems like you kind of expressed some concern that, Switzerland might be losing some of that ground as the preferred digital asset hub. Just focusing on Switzerland, I mean, what do you think for it to maintain its leadership position? Are there any kind of changes or certain things that need to happen? Or, assuming it is possible to maintain that?
I mean, yeah. So look, first and foremost, when it comes to the status quo and just looking at the letter of the law and the regulatory regime, we are, in my view, Switzerland is still very much at the forefront. But it has maybe slowed down the further progression a bit. And that requires a wake up call. It requires, again, more political support. That means that players like ourselves and myself as an individual, we need to help educate or parliamentarians or executive branch of government to tell them that, hey, Switzerland has built here something. Now let's not give it up and let's not be overtaken. So there's a lot of communication and education that needs to happen. And then, yes, it requires the further evolution of the regulatory regime, as the market and crypto, as you started off saying, it goes 8 years is a long time in crypto. Things evolve very fast, so we cannot just keep the status quo. We need to further evolve. But most importantly, probably it's a fact that governments, regulators, and all agencies, similar to companies, they're run by people. So you need just enough, the sufficient number of people in leadership positions that actually are open towards new technologies, to digitization, to change, the same as it is with AI. And that, obviously, that balance changes over time. And so there's years where you have more of these people, and then things move faster. And then sometimes you have in key roles people that maybe are a bit less open, and then it's a bit more tricky. But ultimately, that's part of the entrepreneurial challenge, and everyone has to deal with it and make the most of it, again, in both the up and down swings, right? That's just part of an entrepreneurial journey.
Understood. So, as we kind of wrap this up, I mean, any kind of final thoughts, any kind of topic, thing, that maybe we didn't talk enough about, or we didn't mention at all, that was on your kind of mind, that, that I'm sure the audience would love to hear?
No, not really. I mean, maybe what I hope that as a next step is that we will add, as an industry, more use cases beyond that have real world impact. I know a lot has been talked about this, and many talk about it, but right now we have two that really work and are real use cases. That is Bitcoin, just as an asset, and stable coins, because of the obvious benefits. And we need to maybe leveraging these two tools and existing actual use cases to create more that touch more of people's everyday life, because that will be the key trigger for, again, more people supporting it and seeing value in technology, and this will only drive further adoption. So that will be my call for action.
Great. Well, thank you. I really appreciate you taking the time. If you're out in Singapore, I'd love to catch up for a coffee or something. And, I'd like to thank the audience. Appreciate you tuning in. And, Yeah, I guess we're finishing a little bit early, but it was definitely a lot of things that we covered. So thank you, Matthias. Everyone, yeah, thank you very much.
Thank you very much, John. Pleasure.